Hello, I'm Ben Raquel, co-founder and managing partner of Kingsbury Partners, and I'm pleased to welcome you to our little series with the leadership team and the key shareholders of Alt Lending, a specialist lender in the US student loan refinancing market. Recently, Kingsbury Partners announced a partnership with Alt Lending for a 15 million private credit raise for the acquisition and servicing of a portfolio of distressed, delinquent and defaulted private US student loans. Now, I'm very pleased to welcome Mark Brenner, the CEO and founder of Alt Lending. Mark, thank you very much for being with us this evening or your early morning there. Just to kick off, Mark, just introduce yourself, a bit about your background and your role at Alt Lending.
Great, thanks, Ben. Really appreciate it. Appreciate the time. I started Alt Lending about a year and a half ago, working on state licensure, which can take in places like California or Florida as much as a year. But my background is in student loans over the last 25 years. Started out of law school on Capitol Hill and then worked at a trade association of education loan secondary markets. Got to know all of the major student loan servicers, the secondary markets, and ultimately was hired by College Loan Corporation as a startup. We went from 0 assets under management to 18 billion in just about 6 years. Raised all the money with our head of investor relations and had a terrific experience in the federally guaranteed student loan space. And then went from there over to the school side of the house, working at 2 major universities, not just on their financial aid, but in management as well as government relations. And ultimately came to the conclusion that Alt Lending was a place that would be beneficial to the overall student loan market ecosystem, and brought a team together with decades of experience working primarily with borrowers who are having challenges making their payments on time. So that's led us to the defaulted and delinquent borrower space in the student loan area, and the team has created a portfolio of more than $50 million during their career, and we know about the terrific performance as well as the significant benefits that we can provide to student loan borrowers and to credit collection agencies, law firms, and others.
So Mark, yeah, thank you for that. And again, thanks for joining us this evening. So as you begin to touch on there, let's start with Alt Lending itself, but particularly the type of asset class or what you're focused on. So what is a student loan? We see a lot of talk, particularly in the media, about student loans as a whole, but there's 2 sort of categories, right? There's the federal loans and the private student loans. So what is a private student loan?
Yeah, that's funny you mentioned, Ben. It's been in the news a bit over the last few years. President Biden tried to forgive more than $500 billion in federal student loans, and those are loans that are made to students at qualified educational institutions, roughly 4,500 of those in the U.S., and made through the federal Treasury. Additionally, there's a significant unmet need beyond what the federal government's able to provide, and that unmet need oftentimes takes the shape of a student loan in the private student loan market, and that's just under to about $135 billion space. And at any given time, you're looking at between 4 and 12% of those loans being delinquent or ultimately charged off. And so that's really the space that we work in, roughly a $20 to $24 billion market of distressed student credit that is not part of the federal program. I do know that under the new administration, under the Trump administration, there's certainly going to be a push toward significantly more collections. Been having some of those discussions with what they had was called the embed team and the transition team. And they definitely want to restart student loan collections on the federal program significantly. And it really hasn't been done since before COVID. So I think we're going to be in a position where we're going to see an uptick, a significant uptick actually, in distressed private credit, because now those student loan borrowers are going to have to prioritize the federal program. There'll be more tools that the federal government has from a wage garnishment standpoint than at any other time. So it's going to be a great opportunity in the course of this year and through the Trump administration. We're going to see a lot bigger pool of loans where we'll be able to help borrowers.
So you mentioned that with the additional collections from the Trump team and adding additional pressure, what are the already underlying pressures that are causing some of these private student loans to default?
Yeah, so student loan volume as well as the amount of debt a student has taken on has increased dramatically over the last 15 years. You're seeing the cost of college continue to go up, and with that cost, so does the need for private student credit. And so that's a primary driver. And then I think the secondary driver is we've just seen it in all the credit products. It's not significantly different than credit cards or other consumer debt as it relates to an uptick over the last 2 years in distressed, defaulted, and charged off loans. That is rent, food costs, all of your costs have gone up, and then the prioritization of the student loan, as well as credit card loans and others, has gone down because you literally need to put food on the table.
All right, understood. And you sort of see now with as you say, the Trump team came in. We also saw a very quick win prior to even Trump getting into office in his inauguration in the last couple of weeks or so. That Biden actually withdrew two regulations, which would have saw the forgiveness of 250 billion worth of federal student loans. So I think that where alt lending is now, do you think it's correctly positioned to take advantage of this market and particularly serve the underlying students as well?
Yeah, Ben, great question. At the end of the day, I think the next 5 to 10 years in the student loan space are going to be an incredibly transformative period. The Trump administration is going to start collecting on student loans. And I don't just mean the loans that haven't had a terrific servicing track record, but even those loans that the Biden administration had put into what's called the SAVE program, which is zero or low dollar payment programs. That is all going to go away, and it doesn't require an act of Congress to do that. The president has indicated he wants two student loan repayment programs: a standard 10-year repayment program, and then a graduated repayment program. That will bring significant dollars to the federal coffers, but at the same time put more stress on student loan borrowers to make their payments on their federal student loans. And so I think you're going to see repayments put pressure on private credit, and that's where we have a great opportunity to step in and really help borrowers. We'll lower their monthly costs, we'll lower their overall costs, and we'll be able to deliver a product that really helps them get back on their feet.
Yeah, so now you seem to touch on there about the alt lending sort of style and business model. Just run through us briefly how alt lending works with borrowers to acquire these loans, and what are the key impacts and benefits of working with alt lending?
So the key impacts and benefits of working with alt lending for borrowers are significant. We will lower the interest rate on that loan and lower the monthly payment, and that therefore lower the total repayment over the course of a 10-year loan window. With alt lending, one of the benefits that we offer the credit bureaus and the collection agencies and the law firms is we will work with a borrower on the front end. We will show them the benefits of working with us, and therefore we will be able to purchase that asset from the collection agency or from the law firm at a discount, therefore allowing us to lower the rate of interest that we charge a borrower. And it's a win for the collection agencies and the law firms, and it's a win for that consumer at the same time.
Okay, and now switching from the perspective of the borrower and the attractiveness of alt lending's business model, now let's look at the asset class as a whole and why it's become so attractive. So recently, with our research, we found some of the institutional heavyweights, the KKRs, the Carlyles of the world. So especially last year, I believe it was August 2024, they had a 10 billion acquisition of a student loan servicer in the US. Why do you believe this asset class now is sort of coming to the fore, coming to the mainstream, I should say, from more obscurity?
Yeah, I mean, I think student loans are coming into the mainstream in part because of size and volume. People talk in private credit and people talk credit cards and autos. Student loans are bigger than either of those asset classes.
Right.
So yeah, it's the size of the asset has gotten significantly larger over the last 10 years. And then you've also seen with the KKR acquisition a market demand to own these assets. Historically, you'd have a federally guaranteed student loan, and that loan would be securitized by Sallie Mae, National Education Loan Network, known as NELNET, College Loan Corporation, and others. Now you're having those in the private credit world look at this asset class and say, we think there's an attractive entry point. And some folks like the Discovery portfolio, some folks are willing to sell those assets. And we think, so you've got multiple opportunities on the front end to work with affiliates, and then you have significant opportunities on the back end, either to securitize or sell third party, which KKR proved middle of last year.
Yeah, you're beginning to reference their sort of what they're called slabs, aren't they, in the industry? Student loan, asset-backed securities or securitizations, especially they've particularly taken off since 2008. And is that where your experience was sort of born from as well in that type of market?
Yeah, so after working on the policy side of the world on Capitol Hill, and then ultimately working for the education loan secondary markets, the purchasers of those assets, who did end up securitizing, doing student loan asset-backed securities, as you referenced. After working with multiple of those secondary markets as an investment banker, while I was at William R. Huff and Company, we worked with nearly a dozen student loan securitization companies that were able to access the market for long-term debt. And that really led me to focus on both short-term, working with you, for example, Ben, on some short-term private credit, and ultimately to grow portfolios to a size where you could securitize. And that market has remained strong and robust, working with the major investment banks as well as the rating agencies. There still continues to be significant liquidity for those who are issuing student loan asset-backed securities, and the interest rates on those asset-backed securities are very competitive.
And we nicely pivot in now, as you mentioned there, about sort of our partnership and why we're sort of speaking this evening. And the private credit opportunity that Alt Lending is offering to private, professional, and institutional investors around the world, and why we're raising capital for you as well. So previously, Alt Lending, of course, has secured equity financing through KG Investments. So I'm looking forward to speaking to Giles tomorrow.
Okay.
Why now do you believe that Alt Lending needs to raise private credit? Is there any particular reason for private credit over further equity financing? And why have you chosen this form of capital raise?
Well, private credit is a very efficient tool for a founder relative to equity. And it certainly allows us to grow to scale faster than if we were just on the equity side. So we think we have the right mix of debt to equity, and roughly call it 10% equity to the debt amount being raised, and do that in stages as we continue to raise debt. We will likely continue to raise equity over the next 18 months.
That's precisely right. Yeah. So what a lot when we're talking to founders in your similar position at that growth stage is sacrificing ownership and future profits is a lot more expensive solution to private credit. But Mark, just to finish off here, what excites you about the future of Alt Lending, and where do you see the business going, say, in the next 5 years?
The next 5 years are just a transformative period in education loan credit. For the first time in the last 5 years, you're going to see the Department of Education actively collecting on their nearly $2 trillion portfolio. And that's going to put significant pressure on private student loans. And we will be there to help borrowers navigate that challenge and provide tools and opportunities for them to stay on the right track or to get back on the right track with their credit. I think that, as you've seen the size of the market grow significantly, you've also seen more discipline around offering of credit. And we know that we have a formula that works. The team has had a tremendous experience helping borrowers get back on track and providing a real benefit both to our customer, the borrower, as well as to our affiliate partners on the collection side. So we think we're at a terrific moment in time with a product that completely makes sense in the marketplace.
And this private credit opportunity that's being offered is the one to plug that gap between where you are today and the full-scale securitizations you wish and hope to do in the future.
Yeah, I think there's a perfectly natural progression in terms of building up the assets to continually have a more efficient cost of capital. And I know Ben and the team are extremely well positioned at KMP to help us get to that next level of scale and size.
Fantastic, Mark. Well, is there any closing remarks? But if not, I'll just thank you for your time this evening, and I'll hand back to you for any closing remarks, as I say.
Yeah, and I just want to thank you, Ben. The team you have has invested a great deal of time and effort and focus on understanding our business and our business model, and I think that will show to any of the investors you're speaking with. And we really look forward to working with an international group of investors as we continue to see the scale and size of our business grow exponentially.
Perfect, Mark. Well, thank you very much and appreciate all of your time this evening.
Ben, you're the best. Thank you.